Cathie Wood ARK ETF has crushed over 60% in 2022 alone. According to Forbes, Cathie Wood has lost 65% of her net worth. Experts maintain that Ark Invest has not learned its lesson, as it continues to invest 38% of total assets in growth stocks that have left it in this state. So for this video, we list the basic takeaways you should know about Cathie Wood ARK ETF crushing. Let us get into it. 5. Concentration. For a hedge fund to perform excellently, it should feature a concentration on one aspect of equity. It is believed that Cathie Wood got this right. She has built a superb relationship with her investors, such that they will stick to her despite the hedge fund losing more money than Bitcoin. Her concentration on marketing and interpersonal relationships has saved her the public disgrace of everyone taking their investment elsewhere. Nonetheless, ARK ETF is still struggling with diversification. While Morningstar applauded ARK Invest for having 25 holdings and ensuring that the top 10 comprise 55%, the same decision is seeing her downfall. This does not indicate that ARK should not focus on tech stocks. However, the choice to buy the dip of the same stocks as they continue to fail you after 2 years is a lesson for everyone. Cathie Wood was right about Tesla, but maybe she needed to focus on newer tech stocks when Tesla stopped exhibiting cash cow behavior on the stock exchange. The one pony trick of growth stocks is tired. Next. Before the massive pump in 2020, ARK was struggling to meet the average return rates of a hedge fund. Soon, we will talk about the lesson of researching a fund to avoid performance chasing. 4. Change is inevitable. An illustrious hedge fund could still be faced with challenges. No one has stayed on top forever. One minute you might be up, and the next you will swing low. It is only appropriate that a hedge fund prepares contingency plans instead of relying on the tired excuse of a long-term outlook. If you are a fan of Cathie Wood's, should I buy Ark Invest? Here are some statistics to help you. Ark Invest has 9 ETFs under its supervision. Cathie Wood was the lone portfolio manager until September 22, 2022, when she relinquished her role and took on a general role of a chief investment officer. According to Forbes, Wood has lost 65% of her net worth, as the hedge fund has also lowered 60% of its value. In fact, in 2021, Ark Invest was worth more than $60 billion, but now the fund is struggling to maintain $16 billion. 3. Investment isn't instant cash. All seasoned investors were worried when Cathie Wood appealed to risk-hungry investors with her bullish stock views. Wood started her ARK fund in 2014, but people did not know her until she predicted Tesla's massive growth. From the time she started until her fame, the real investors enjoyed what a true hedge fund offers. They made money that made mathematical sense. However, once the explosive high from 2020 set in, all indications showed that underperformance was underway. The biggest takeaway from this story is that investing in funds should not be a quick money scheme. Buy when they show consistency and not because they are recording soaring numbers, because you are likely to be buying into the highs right before the dip starts. That phenomenon is called performance chasing. For instance, Kashner revealed that ARK ETF scored 1.25 percentage points lower than the average hedge fund before the big break in 2020. Therefore, do your research and not buy into investment fads, especially since Cathie Wood Bitcoin predictions are on the table for the next 4 years. If all things are equal, Bitcoin will hit $1 million, and people will pump money back into Wood's hands to face this crush again. What is next for the fund? Do we cancel it altogether, or do they seem to be taking steps to regain public trust? We will tell you about the updates coming from ARK Invest. 2. Untapped industry. Of course, we might never get ARK to go below 30% for tech stocks. Experts have called Cathie Wood's commitment to growth stocks her biggest downfall. Currently, all hedge funds are looking at the housing market, where a crisis is set to calm after the economy cools off. Stocks for hardware companies and building companies are a hot sell right now. In addition, fine art has become the safest net for investment in an economic climate like this. The prices are never lowered and can be kept for generations to come. Thus, while commodities and securities struggle to keep up with inflation, contemporary art pieces are the best stocks to buy right now. outperforming the S&P 500 by over 162%. If you want to know more about other sectors that have breakthroughs, subscribe to our channel. We have more in upcoming videos. 1. Moving forward. We must understand and appreciate that macroeconomic factors have negatively affected ARK. We can understand that the 66-year-old founder struggles to change her strategy even when all is sinking around her. Nevertheless, her decision to reshuffle her staff indicates that she might be open to change. William Scherer, a trading manager at ARK since 2014, has become portfolio manager of ARK 3D Printing ETF and ARK Israel Innovative Technology ETF. Sam Corris and Nicholas Grouse have all been promoted to associate portfolio managers, hinting at a successive plan for ARK investment. Thus, the final lesson is that sometimes we need to let others take a turn at the wheels when our investment tricks do not work anymore. Cathie Wood is not a villain. She is facing a terrible time in her career, but she has some interesting life stories. For example, did you know that Ark Invest is named after the Ark of David? We have a video on the top 5 things you didn't know about Cathie Wood to learn more.